bringing in of the new year. And with that, right, one thing I do want to share, and one thing I was looking at with the market is if we move back to a year chart and you take a peek at the past 3 years, well, we're relatively in similar spots. In 2021, we close on the high. 2022, we close near the low. In 2023, we bring it in with a new all-time high, closing at the high. We get this 100% retracement after that deep pullback in 2022. 2023 brings us all the way back. So just something interesting, right? A big equilibrium here. And you know how we treat equilibriums if you've been here for a little while. Uh, they tend to have a little bit of pull towards them. Switching back to the monthly here, you can see how we finished off December. We finished off at the all-time high, trading up, finishing the month as a +4, making that settle of 48.20 a key point coming into this month that we'd like to see the market continue above if it is going to get continuation, or if that momentum is going to continue to build to the upside. One thing that we're kind of seeing here is a little bit of pullback, right? The market trading down 47.80, so we're about 40 points off of December's close. So that will be a key point should the market catch a bid and start to go up. Look for that 48.20 to be the level that it tries to achieve. Switching over here to the weekly, you can see we're continuing the one-time framing up. A very small week last week, or very narrow week last week, almost an inside week. We did peak above the previous week, but the low of last week, 47.9675, we're trading below that now, and most likely going to be below that level, giving us a cessation of one time framing on a weekly time frame. And this is something that I've always talked about, or that I continue to talk about, is typically that's where I like to draw my indication of change from, is on that weekly chart. And so when we get a cessation of one time framing, or we see some sort of change on a weekly chart, we can and should factor that into our trading. So we had been very bullish for a good portion of time, probably since October for the most part. And now, for the first time since then, we're getting a cessation of one time framing on a weekly chart. So that just lets us know that there may be some possible pullback in the market, right? So we look for some areas that we think the market could possibly pull back to, and we have our equilibrium below 47.68. And that is a level that I've talked about for weeks and weeks, and for about a month now, actually, being the key level that the market should hold. And if the market doesn't hold that level, then I do expect us to possibly test down into these weekly single prints, and that would take us below that 47.40. So that would be a failure to hold that 47.68. I think probably takes us down another 30 points, and then we'll see how the reaction happens from there, right? It's really kind of impossible to be like, oh, it's going to hold from here, it's going to hold from there. It's just, you have to pay attention when it's happening to see kind of how the market reacts. With the new year starting, right, there's going to be a lot of people that were left out of the rally last year, didn't catch the nice bid like we did. They didn't catch the turn in the market, and so they're frustrated, and they're going to be forcing a lot of trades. So I do expect the market to kind of trade past a lot of references and then come back, as a lot of momentum traders on both sides of the market will probably be seeing a lot more volatility to start the year. Now, switching over to the daily, you can see Friday we had that cessation of one time framing. We had that liquidation followed by kind of a big short covering rally leading into the close. The market since then has traded lower than that, but that'll be a key thing because we had a negative 4 day on Friday. And if those of you guys that are watching on YouTube and are kind of confused about why these candles are green or why these candles are red, just shoot me a message. We'll get you in the Discord and talk about it more there. But basically, that negative 4 day on Friday is letting us know that we don't want to be long for the most part unless we can get above Friday's close, which was that 48.20, which was that monthly close, weekly close, and daily close, right? It's a monthly +4, but a daily -4. So it's an interesting type. It's a daily reference for us since most of us in here are day trading or intraday trading, or maybe a couple swing traders in here, but for the most part none of us are managing any money and trading on a monthly basis. So the key really is that -4 on the daily. Now switching over here to the profiles, we can see Friday's action, right? We talked about that liquidation. We get this double distribution look. We have this one distribution here, another distribution here, and we have since liquidated in the overnight session. Now here's this 48.20. That's the level that we talked about being the key level for the market to get above if it wants to continue any upside, getting a strong liquidation. I don't know if we do have some news today. Manufacturing PMI 945 and construction spending at 10. So not really anything too crazy. Morning, Thomas. But we do have, for the most part, we'll say 90% short overnight inventory and a gap. So the play we're looking for today is going to be a gap play. Should we close the gap, we'll be looking for play number 1, just a break inside that value, and we'll trade short. Now you can see on the larger time frame these two distributions and the thin spot here in the middle. And so with that, and this thin spot kind of coming in right at this low, that's going to be that kind of separation. So should we get above that or reject this level, even if we tap into yesterday's range but come back out, that could be a nice go with trade. And like I said, we're looking for that 68 level on the downside. That's where the liquidity is at. That's where there should be buyers at. Market likes to move to liquidity, so that's where they should be looking for. Now, if it can get past that and you don't find buyers there, then I do kind of expect us to trade back down into some of these singles, and that's that 47.36 and then 47.27. There's a little bit of space down there that I kind of expect the market to go down and look for some liquidity on a continued liquidation. But other than that, any rally is for the most part sellable unless we get above this 48.20. Now let's say, because anything can happen, right? So we don't want to get fixated on only having, okay, I'm only going to get short today, which is what I'm going to be doing, but everyone can trade how they want because there's going to be long opportunities. Now let's say the market opens up and just catches a strong bid, right? And just kind of hangs out. A period finishes at the high. B period catches another bid and just starts to hang out at the high. Well, I'm not going to be shorting a rising missile, right? That's just not good practice. What I'm going to be looking for is if there is a strong bid during A period, I want to get back below that A close. And this is also something I'm developing here. Another thing for you guys that are Uncle Thomas, that's Tobias on the iPad, my dad, Pip, Tommy, and Zoe, I've come up with actually something else that we can incorporate into our strategy to mitigate risk. It's not going to help us as far as, winning more trades, because that's just not something that I focus on when I'm developing a strategy. I develop my strategies purely based off of risk management. And so it is something, and I'll share it later today once the market slows down a little bit, and we can kind of dig into it. But there's some other key things that I've found when we're looking for something and then the market kind of doesn't go exactly as we're expecting, or we get these strong moves off the open. You get that kind of opening drive move. And for me, A lot of traders kind of look for that. They look to trade within the first 5 minutes. The market gets a strong move in the first 5 minutes. They want to go with that. They want to be done for the day. A lot of times the opening drive to me doesn't necessarily stick. And so I'm not really a huge fan of taking those trades. Um, but that's up to you, right? That's up to you. It's up to your back testing. It's up to your trading plan. If you want to take those trades, I'm not saying that they don't work, obviously, because a lot of traders do take them. It's just not how my strategy works. But so if we do get that strong rally and we start to see A period kind of form back inside, but B period starts to trade below that A open, I think that's a nice opportunity to jump on board that short and that test of that 68 level. And you can see we're running out of a little bit of selling here. You're starting to get a little bit of a 45 at the low. So a little bit of weak selling, but it's Globex, right? So I'm not really putting much weight into that. But that is something to note. Like, so if you're in a trade now and you're in a short and you caught a nice move down to this low, well, it might be starting to be time to either take some profit or move some stops up, or maybe just go ahead and wrap that bad boy up. But other than that, you guys have a wonderful day. Once again, Happy New Year, and make sure that you're managing risk and sticking to your trade plan. See you guys tomorrow.